Hey, this is Jack from Alpha Charts with a state of the market video. Today is March 11th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. If you don't like and subscribe to if you don't subscribe to my YouTube channel, please stop and do that now. It does help me out quite a bit, and I produce these videos for free for everybody. So I really do appreciate that. Find me on Twitter at AlphaCharts365, right? I'm always posting things on Twitter, scans and ideas and thoughts about the market and other stuff. And if you really like this content, consider super follow. We talked about the changing market and now midweek in my stock market notes and everything. So a lot of my super follows were aware of the changing situation and sidestepped most of the carnage we're about to see. So again, at AlphaCharts365 on Twitter. Okay, let's get to the markets. So we had a bull case and a bear case coming into today, right? We both were legit and valid, and it looks like whether it's through bank runs or whatever happened, it changed the narrative, right? We don't really care what happened, right? So much as to know that it changed the narrative, right? We had this very significant higher low here that we were watching, which is right at the VWAP of the ultimate low right down here. Not the ultimate low, but this important low, we'll call it. And price on Thursday and Friday took out that low. That was a very, very significant move, in my opinion. And now this VWAP and the 200-day moving average, which are basically in the same spot, becomes an important level of potential resistance now on this chart. And that's a big deal. Again, we had a beautiful base that was forming. Again, it's not quite busted yet, right? We haven't taken out this low, but it looks pretty busted to me. And so there's really hard to say be long equities right now. So let's talk about the volume for a second here. I posted something on Twitter yesterday. Said, was this a capitulation type of day? And it may have been. Now, again, it's not the highest volume ever, right? I mean, you see, when I put my line right there, there's been higher volumes, but there was a rush to sell. This is not organized selling. This is everyone's heading for the door at the same time. And if the Fed facilitates a takeover of the bank over the weekend, today is Saturday morning, by Sunday night, if they facilitate a takeover of the bank and Monday, it opens up under a new name, right? And everyone can access their money again and make payrolls. And that's what everyone's worried about, right? Can these venture firms make payroll? If that happens, then everything's okay again, right? So that's what I expect to happen. I expect the Fed to facilitate a takeover of the bank by the end of the weekend, Sunday night, and everything to basically calm down. And I wouldn't be shocked if we see a rebound on Monday if all of that takes place. And then we have the most important level, this 39.40 level, right? So the question then is, does 39.40 become resistance? And I think that's the level to watch now. So long-winded kind of talk through why 39.40 is going to be very, very important. Now, when we look at the moving averages closer, we have a flat 200-day, and we have the short-term moving averages obviously moving down, and the 50-day now is flattening out again. So we may get an alignment. As much as we were looking for alignment on the bullish side, we may start to get an alignment on the bearish side if we do stay under 39.40 for an extended period of time. And I wouldn't be shocked if that happens if we see, whether it's this low or this low, somewhere in here taken out, right? Maybe even the ultimate low. But just remember, things are starting to get pressed to the downside again, and nothing goes straight down, even though this has a waterfall look to it. If there is some positive news Sunday night, I wouldn't be shocked if we see the rebound, and then we'll have to see what really happens, right? Do buyers get invigorated to get back into the market or not? but that is the important level. On the week, we had a 4.55% drop. So that's a very significant drop. We haven't seen 4.55. We saw it here and here. These are two pretty rough weeks. That looks like those are close to it right there. And so we may be in a situation like this, 1 to 2, maybe even 3 weeks to the downside. We'll see. Again, on the week, the volume wasn't like over the top, even though on Friday it was a much higher volume day. We'll see. 37.25-ish. That's a spot. That's where the 200-week moving average is. So we'll look at that. And again, on the weekly, we do have this bearish engulfing bar right there, which leads you to believe that there'd be some downside follow through. All right, so 4.55 on the Qs. Let's look at RSP on the week. RSP was 6.07. What does that tell you, right? That tells you that basically they were selling everything. Everything. I mean, look at that bar. That's a significant bar. And on the daily, you see giant volume, which we haven't seen. I mean, we saw it back here in November, and it's been a while, right? It's been a while. So, yeah, I mean, everything's being sold. This is the fire sale. Just get me out. I want to be in cash type of mentality, which is why I said a short-term bottom may be it. If you saw my Twitter post, right? This is the fire sale look. This is the part that you say, okay, well, everyone's went to one side of the boat type of thing. Don't know if that matters or not, or if there'll be follow through to downside. But again, if we do see things stabilize, I wouldn't be shocked if we see this 200-day get tested from the bottom, right? But that is an emotional reaction, and so that's something to consider, right? If you're short, depends on your time frame too. Looking at the Qs, again, broke through. I was looking at this potential cross. It was going to happen any second. It probably still will happen, but price will be then below it, and it won't last for very long if that's the case. Not much to see here. We're going to look at this 295, 260, we'll call it, level as a potential area of support coming up. It's a shame, but it's what happened. Again, selling was very significant across the board. And let's go to the weekly. A big bearish engulfing, lots of nasty looking weak, that just nasty looking week, down 3.71. So actually Qs did way better than SPX, right? Only 3.71. And that's probably because Qs are not exposed to banking in the same way. The equal weighted 4.87 again shows you they're selling everything, right? Volume wasn't quite as dramatic, but it was definitely higher than normal, than average. And you see price up right around the 200-week moving average. So you see that 200-week is kind of important overall. Again, and going back to SPX, we talked about the potential. This was a lower high, right? High, lower high, lower high, potentially lower high. I mentioned this on this specific video a couple of weeks ago, right? When we couldn't quite take out this high. So that could be a lower high. And it looks like it was. IWM down 8%, right? Absolutely brutal, risk off territory. We still have a rising 200-day. This is the weekly, by the way, 8% on the weekly. The 200-day is still rising, but actually it's flat again. I'm going to take this out now because it's not rising. It's now flat again, right? It was rising back here. Price, again, that waterfall type look. We're back to the daily on this, and I wouldn't be shocked if this 170 area gets retested. I don't know if it, Monday and then we get an announcement or the announcement Sunday night, but I really think that they do something with this bank and they don't let it just completely collapse and every, venture firm behind it collapse as well. not every, but quite a bit. A lot of mature companies had money in this bank as well. Again, I see them stepping in at some point. Yeah, but 8% on the week, and again, this is maybe a capitulatory type move, very significant. You see back here, it was a short-term bottom if nothing else. Back here, right, short-term bottom if nothing else. So this may be a short-term bottom. That's what I'm talking about. Again, 181. That's your potential resistance right there. IWO on the week. Let's see what that was. See, IWM was 8%. This was 7.79. So right there, and really on the week, this has a very on a weekly chart, a short pattern really set off here, right? 1, 2, 3. Usually you see these, 3 little humps and kaboom. So, looking longer term, right? If this does fail right here, this 200 level, I mean, we're looking at another 20% to down. And let me just go back here. This will be fun, right? On the weekly chart. SPX, where are we looking at if this fails? Probably 29.32-ish, right? On the Qs, on the weekly chart, maybe 190-ish, somewhere around there, right? That could be, there may be, and again, won't go straight down, but if that happens, that's what I could see. And let me see if we could do SPX on the monthly. I have it here. I'm trying to think if my monthly charts are set up still for this or not. Yeah. So this was my worst case scenario monthly chart, right? And looking at this, if this is a 5-way wave pattern, I'm going to go all the way back here and make it into a line just so you guys can see what's going on here. This is my worst case scenario chart, right? This is the scary chart. Okay, I just want to get all this out of the way. Okay, so this is the 1932 low in the stock market, right? This is the Great Depression right there. And you can see there's a trend line that is pretty significant all the way up, right? And you see how there's almost like a 5-wave pattern that I think we can, pretty much deal with right there. And, and this was the top right here. So if this is an ABC pattern, right? And the 161.8 is at 2861 on the S&P, right? So I think that is, if this does break down, everything goes to hell. That is a potential place that we could land. 25-26% from here. That's pretty bearish, right? And then you have this area right there, which is a full move, which is 2141. But these are the areas I would expect, right? So 3,500, we'll call it. 3,500 is going to be important. And then after that, 2860, right? The exact numbers are right there if you're interested. So this is my worst case scenario chart, right? Like things aren't going to zero, but if we hit the 1618, that's pretty significant, right? We'll see. We'll see what happens. Again, this is with the bars. That's where I got these numbers from. I don't know. Talking about measured moves, right? This was 27% right there, right? So if you go from I'd probably go from there, it's pretty darn close to a measured move right there for ABC type pattern. Not saying that's going to happen. And again, I don't want to get too overly bearish. We got to trade the charts that's in front of us. But on the monthly chart, this is a potential scenario, right? So we got to be aware of that. Okay. Let's look at ETFs. Start with the XLF because it looks terrible. So XLF was looking great, or pretty good at least. And then again, it started to fall apart. Again, we love that it had an uptrending 200-day. Now it's a flat 200-day, and price just ripped right through it. Didn't on the way down, just did not care. we'll see if it continues this 31 and ultimately $30 level. Again, let's go back to the weekly chart. Why the $30 level is so important. Maybe a monthly chart's better. Yeah. So here's your monthly chart. Again, we're going longer term charts. This was the financial crisis in 07. You can see in 2018, 17, 18, it held here again in 2020, ripped through it in 2021, came back and retested, held it, right, in 2022. And now we're going to see if it holds again, right? If it comes back and tested. $30 though. XLF has to stay above $30. Below $30, and things get really nasty really quickly. Not that they aren't already. And you see that the financials are just getting murdered here, which is why SPX did so much worse than Qs, right? Qs are tech heavy. SPX has a better mix of financials, energy, and so on and so forth than the Qs. But again, just getting absolutely murdered. There's no reason to be long. If you are long, we get that bounce, I would consider exiting, because there's an immense amount of volatility and XLF is getting again destroyed. We need XLF at least participating. It is no longer doing that. Looking at semiconductors, XSD came back, tested the 50-day moving average, and it held. I guess that's a positive, right? Held, and selling wasn't like full scale, sell everything that's not nailed down. So take that arrow out because it started to do that and then didn't. And so we'll see if this area holds, right? If 190 holds, it's just another retest. Again, it may chop around, and it's got to take this 210-ish period out, price target out, because if it doesn't, it may just be setting up for a potential short. We'll see. But right now, it held where it had to. 190's got to hold. It did. 200-day moving average, is at 192.5, and that held as well. So we like that. 200-day is rising. Semiconductors right now bended, but they didn't break. So that's good, right? Sorry, transports, XTN. XTN, again, looks pretty rough and definitely did not do that, right? So we're going to take that out. And again, you have kind of A, B, this may be a C, the flat 200-day. It did not break the 200-day, so that's a positive. Again, we'll see if it comes down, kind of tests it, holds, and bounces from there or not, but not a good look. I mean, on the week, it was down 6.88, and XLF was down 8.50, right? That's pretty ugly, XLF right there. Transports were down. Semiconductors probably not much less. Yeah, only 4.87, right? Still 5% down on the week. And then let's look at the last one, which is home builders, XHB. Home builders down almost 5% on the week. And you can see that they're taking out a very important level as we speak. It's like right there. They're right at the level, with an upward 200-day moving average, sloping 200-day moving average. But this would be, if you look on, let's look at a monthly, right? This could be a false breakout right here, right? On the monthly, which would be very significant. And even on the weekly, I'd consider that a false breakout. If this does continue lower, that could get really nasty for home builders really quick. And this just may be starting. So we'll see. So the indexes on the index level, not very good at all. But let's look at the internals and see what things are doing there. All right, so let's look at the VIX first. Looking at the VIX, we got the spike, and again, we'd expect that volatility increases, but there is room to the upside. So again, if they don't do something to the bank Sunday night, there's your room to the upside. Cold coffee, gross. But so there is room to the upside. If they do something, I can see it coming back, and then we'll see how much of stabilization happens in the VIX at that point. We've seen spikes before. We'll see if it happens again. Again, if they come in, stabilize that bank, and there's no new banks announced that are failing, we expect that to go back down. Yeah. So let's look at credit spreads because that's an interesting chart. So here's credit spreads. Let's go to the weekly on this just so we can get a better idea of what's going on. So here's the thing. Back in 2014, we saw a move up, a consolidation, then a big move up. Again, pretty nasty on the market. We saw a move up again. This is kind of a spike right there. Then it kind of stabilized, and then a big nasty move up, right? That's COVID right there. So is this the same type of repeating pattern? I don't know yet. We'll see what happens. Again, it all depends on Sunday night. What is going on. I'll guarantee you they're working behind the scenes, figuring this out. But if we take out, 160 and then 163, that would be much, much more concerning and give more of a look like this, right? Or even like this. And that's what we don't want to see, right? Yeah, that's what we don't want to see. So, you could even say this was the consolidation right here, right? It's kind of like that. So anyway, that's, we don't want to see a continued spike up. So credit spreads widening, not good at all. And as you expect, breadth is falling. Again, not in that that overdone space. So there's room to the downside if they want to bring it, right? If nothing happens, there is room for more capitulation to happen. We may only be partly through it. So definitely be careful with that. And then and put call ratio, let's see where that's at. That should be interesting how bearish the people get. We do have that overdone bearish look, right? So going back, you had, December 18th was important, and you see this overdone December 16th, and it got to 1.8 on these days, right? These major bottoms. Here's 2010, it got to 2.85. So 0-date options is a thing. And this is on the weekly chart. Let's go to the daily chart. I think this will show up better. Yeah. So there you go on the daily chart. Again, it touched the line. I'll put in my box here. Today is 3/12. I guess it was 23. Actually, I just put it 3. Perfect. I do that in red. Let's keep it consistent, right? And then the box is white. Right? Everything's all look exactly the same. Oh, and it's probably like a 12. Yeah, bigger than 14. Sure. Okay, so we have this spike right here. And is that done? I don't know, right? There's room. Again, this is just recent. There's room to the upside. So we'll see if, we get a little bit more fear in this market. But people are definitely getting to one side of the boat. I guess that's my point. But there is room for more people to join that one side. Then I believe a short-term bottom, and that's a place where if I'm going to cover my short that I have on, I'm gonna look for maybe one more thrust, and then just get out because I could expect maybe a rebound happening. At the very least, at a short-term level, and maybe longer. But yeah, things are starting to get overdone on the internal side, right? And let's just look at dollar DXY. The dollar kind of it retreated, and so things are spiking higher with the dollar retreating. That is, we get any strength in the dollar, that's going to be a problem, a big time problem. Right now, we're not. Even though on the week it was up just slightly. We'll see. Was this a false breakdown? And we get to the 120. 120 is going to be important in the dollar index. That's where we saw the 2001 highs, and that's the next level. Obviously, 115-ish will happen maybe before then, and that could be a level. But to me, this looks like dollar wants higher, unless it's unless we get below 102-ish, right? 102.50-ish, right? But right now, we're getting the March higher in the dollar, so don't like that at all. And then let's look at TNX, the 10-year. Nice lower high in the 10-year at 3.7, right? We were over 4, not like literally last week, right? So we're starting to see the decline in the 10-year. Again, if that could continue, wonderful, great. I think that's going to be a positive for markets. But if we see a spike back up, that'd be a problem. So just kind of watching the dollar in the 10-year as far as what they're kind of telling us. And yeah, I mean, and Bitcoin getting murdered, I believe. I haven't looked at it in a while, but let's look at Bitcoin. Coinbase one. Yeah, I mean, just getting really destroyed on the week. You see, it's down 10% on the week, and it's it's at the inflection point, right? So this green area is prior support. Rip through it, come back, is retesting it. 20,000, 18,500, even 18,000 is a big deal, right? So there's room to go to the bottom. We'll see if it does. Not a healthy look to it. But listen, even gold is getting destroyed, right? We got a spike up on Friday, and it was up 2 weeks. Look at that, 2 weeks in a row. 0.8 and 2.46 the week before. But in the end, we have lower highs, and where's the place that you can say, oh, I want to be long gold? Like, there's no like trend here. This is just a mishmash mess on the weekly and even on the daily. Like, it's very hard for this chart to get involved. So in the end, we have a very volatile risk off type of market. We know our levels, right? Especially this 200-day on the SPX. This is a big deal, 39.40. I wouldn't be shocked if we get continued lower, maybe 37.80ish, maybe this area for a short-term bottom to be in, and then we would look for the Fed to do some kind of action this weekend to try to stabilize the market. That is my expectation. That's because that's what their history is, and then we'll go from there. All right. So I hope you all are doing well, and good luck this week, and definitely know your risk out there, because there is a lot of risk, and we see more banks starting to fail. That's going to be an issue. So we'll see. All right. Take care. Good luck. Bye.